Hi, and welcome to State Administration Services. Debt Remedies Information Tutorial into Part 10, Personal Insolvency Agreements, and how they can wipe out substantial debt without the debtor-client going bankrupt. Part 10 comes under Part 10 of the bankruptcy legislation, and is a mechanism whereby the debtor can offer to their unsecured creditors X cents in the dollar, but less than the total amount of the debt. Now, let's look at an example of how it works and who is involved. A Part 10 personal insolvency agreement is whereby a virtual meeting of the debtor's creditors is held via a registered trustee. The debtor puts forward a proposal to his creditors. So let's say a debtor owes $200,000 to their unsecured creditors. At the creditors' meeting, the debtor proposes to repay $100,000 back in lieu of the $200,000 he owes. The proposal then goes to a vote, and, if 75% of the dollar value of creditors, and 51% of the number of creditors that bother to vote in favor of the proposal, then the proposal is accepted, with the result being, the debtor has wiped out $100,000 of his debt, and does not need to go bankrupt. The money the debtor does propose to repay can be paid by way of a lump sum payment, or a partial lump sum payment, and the balance over a period of time, or again the whole amount over a period of time, and it is interest-free. When putting forward a Part 10 proposal, the debtor needs to be able to show creditors that the proposal will offer them more than they would get in the event the debtor went into bankruptcy. Now, who is involved in setting up a Part 10 personal insolvency arrangement? Firstly, there is a registered trustee, who will be nominated by State Administration Services. Debt Remedy. State Administration Services helps the debtor prepare the proposal to be submitted to creditors, and liaises with the trustee who will call a meeting of creditors, and recommends to them whether or not to accept the proposal. To assist the debtor, State Administration Services will liaise with the creditors and lobby on behalf of the debtor to encourage the creditors to vote in favor to the debtor's proposal. The benefits of a Part 10 personal insolvency agreement are: the debtor gets to legally wipe out often a substantial amount of debt, retain all their assets, and what they do repay will now be interest-free. They will have no travel or income restrictions imposed on them, and they don't go bankrupt. The only main prohibition placed on the debtor is that they cannot operate a business as a company entity until they have paid out the amount offered under the Part 10. Part 10 is one of the best and most formal mechanisms enabling an individual or partnership to reduce debt and get on with life without going bankrupt. Our clients can be insured State Administration Services Debt Remedy with their 37 years experience in the insolvency industry. Arkansas with them through the entire process.